Hello and welcome to this week's Financial Friday, where each week I break down one item of buying or selling a home. So this week we are going to dive into bridge financing. Bridge financing is an amazing tool, but a lot of, especially first-time sellers, don't know about this tool. And I absolutely love it because it actually makes moving so much easier. So bridge financing is something that we would use when you're looking to sell your house and buy a new house. So the easiest way to think of it is you've sold your house, but you don't want to be homeless for a couple weeks. So what we do is set up possession on your house that's sold a little bit later than the house that you're buying. And so you'd have 1, 2, maybe 3 weeks where you would own two houses. And that bridge financing actually just covers that interim where you're owning both houses. Now, bridge financing is, the interest rate is higher than what you'd be getting at for your mortgage, but it is meant to be a very short-term loan. So since it's short-term, that amount that you're paying is not a huge amount. Typically, a bridge loan would cost you prime plus 2 or 3%. So it would definitely be higher than your mortgage rate. And prime fluctuates often enough that could certainly change. So I just won't say what it is. But that rate, that small term loan would allow you to own two houses. We've seen people do it for even 1 or 2 months. And it just makes moving so much easier, so much less stressful, because you don't have to worry about having to be moved out of your old home in order to get that money to buy your new home. So I absolutely love it. This is something that's done through the bank. If you're getting financing on your new home through that bank anyways, and you're thinking that you just might want to get possession a little bit earlier, you can certainly talk to them. But that's how I structure all my deals, so that you would own two houses at once, just so that you're not trying to overnight it or move out of that home, get it all ready for the new buyer, and then being homeless for a couple days or a couple weeks until you can get possession of your new house. So bridge financing is just designed to make everything easier and kind of, well, bridge that gap, right? So the way that it makes your life easier is by not having to worry about 2 payments. You're not having to worry about getting that equity beforehand. And some alternatives to a bridge loan would be something along the lines of like a home equity line of credit. So if you have a large amount of equity in your home, you could use that equity. Again, you'd be borrowing that amount from the bank, but for a shorter term, until that would cover your down payment, that would cover your lawyer fees and everything. And you're just borrowing that money until you get the proceeds from the sale of your house that you're selling. So it definitely doesn't apply if you are a first-time buyer. If you don't have any gap to bridge between selling and buying, it doesn't apply to you. But when you are selling a home and looking to buy a new home, it makes things so much easier. So thank you for joining me today, and I hope you have a great weekend. Bye.